Markets rebounded, taking back half of the overall correction yesterday. Futures are soft this morning following lukewarm reports from IBM and Intel. What's next as we cross through the heart of earnings season? I'm Taylor Schranz, and the morning call starts right now.
Good morning. I'm Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Scott, we had some really interesting action over the past couple days. Futures point to a relatively flat open on Wall Street going into trade this afternoon, but we have to take a look at what happened over Monday and Tuesday. We saw some really impressive action.
Yeah, well, you saw a reversal in the S&P 2 days ago, and then finally yesterday the Nasdaq joined the rally, so that added some power. And at this particular point, I think they pushed the bears back a little bit on their heels. We went from being, I think almost 5% or so off the highs to only about 2 to 2.5% off the highs. So a lot of people are asking, what's next? Was that the correction? Do we now get into a new uptrend? So I think a lot of guys are trying to figure out what gear to be in. At this point, I still think the market has a lot to prove, but stock selection has been key, both long and short, in the last few weeks.
So how are we looking going into trade today if we take a look at the SPX?
Well, if you take a look at the chart, you'll see right here that we've had a few trends that have been broken, and now we're starting to retest some of them. Some guys have been telling me to start drawing my longer term line from the bottom of that October low. So if you draw it from there, it connects all the way up to where we held right around this low here. This low here was actually about 1357. Okay, we had a nice 2-day snapback that then got negated, and then we held higher right here. And I do believe that this was, I think this was Monday. And then yesterday, finally, we had some power. We had some power that closed near the highs of the day. We were able to punch through this little resistance area, and now we're heading into some really big resistance where we broke down from around 1397 to 1400. So I do think today on the S&P, if we could hold the top third of yesterday's range, or even the top half, I think that would be very constructive for the bulls.
Moving along to the sector spotlight, a big participation in the tape yesterday came from the tech names. What's really interesting is Scott and I try to identify themes every time we go into a new quarter. What we're seeing happen with tech in particular is these names are bid up really high into the print when they report earnings, and we're taking some money off the table. Some of them hit their 52-week highs, like Intel, for example. We're going to take a look at it in this particular segment. But let's kick it off with IBM. This is one of those stocks you're not going to get fired for having in your portfolio. Long term, that fundamental thesis is intact. I think what investors were looking for was to see how they're going to use their cash, if they're going to continue to put it into the software and services segment, which is 80% of the business.
Yeah, and I think a lot of people were somewhat worried about what kind of quarter they're going to have because of all the European exposure. I think that the quarter was okay, but for a stock, if you look here at the charts and see how they bid it up, like you said, into earnings, of course they're going to take it away because it wasn't Blockbuster, and no one was really expecting Blockbuster. I do think it was somewhat solid, but at this particular point, you look at the rally that IBM's had this year. So at this point, I would say short term, I would watch this 202 level. 202 is pretty important. I think it's opening right around there. So I'm going to look to see if there's any opportunity for me to buy it potentially, versus the low in the first 15 minutes. But if it can't hold 202, you have the moving average here at 201. So this would be like zone 1 of support based on the earnings, but this doesn't hold. You could see it move back down to 195 to 197. So I would watch 201 to 202 short term, but longer term, if the market does correct further, you might get a 195 to 197 entry.
Moving along to Intel, this is one of those names where it was trading at its 52-week high prior to reporting the number. It beat on EPS, it beat on revs. The concern here is that margins may have topped out, that they've peaked, and what's the next catalyst? That's what investors are going to be looking for.
It feels like they could either take it half full or half empty. And with this report, I thought it was solid too. But again, if you bid a stock into 52-week highs, you better have everything in that report perfect. And the margins were a little weaker, but they were still above 60%. That's a hell of a business there. But so if you look at the chart here of Intel, if you don't take stock into earnings and you sold into this bit of a reversal yesterday, you know what? You have an opportunity here. I do think it's down pre-market. It's right around support here. So I would say short term today, this too, you watch it versus 2740. This would be an area that it would be good to hold constructive wise. Also for the market composure today, if they open Intel down 80 cents and it only closes down 40 cents, you'll see a nice bounce in the market. If we do not hold this 2740 area and there's no bounce, the next real support comes in all the way down here, and this area of support is about 2636. So again, support 1 and support 2 will be able to judge the market action based on where these things pause or rally from.
Moving along to Seagate, ticker STX. I love this name. It crushed the quarter. It blew away on earnings, I think almost by 50 cents. It had a really impressive beat. They took up the dividend last quarter in Q1, fiscal Q1, and also increased their share buyback. It's a really great name. They're putting that cash to work, and I like it. I still think it has room to run.
You know, there was a lot of concerns about these names too. Remember the floods and this and that, and there was always drama around this, and they still, you know, firing on all cylinders. I don't trade this name that often, but if you look at it to trade for momentum, if you take a look at the chart, you know, it did have a big move also. In order to get long this thing, I think it's got to get above this 29 area and hold above 29. I've seen a lot of these stocks open up near here and sell off, so make sure this holds if you're going to buy it. I'm going to avoid it, but it does look strong. They had a great report. Just make sure that they don't sell the news.
Moving along to Yahoo, this is just one of those names that cannot get out of its name, like the Amazons and Netflix. The earnings, okay. What really you need to look at here is a strategy. What is happening next? There is no catalyst here, and I think that's what really investors are focusing on, what's going forward.
I don't think anyone really cares unless there's a buyout.
Right.
You know, so it's like a dead name. They can have a great report. The way the street has positioned them is unless there's a full buyout, no one's really excited. So if you look here at the chart, you know what, today if you look at it, it's opening up around 30 cents. I guess if it could hold above 15.50, you know, you do have the next resistance area around 16.10. You know, they do have a lot of eyeballs, they have a lot of search, they distribute a lot of our content, we like Yahoo a lot. But anyway, you can't take your likes into this, but above 15.50, if it could actually hold, next level here is really 16. And if you look at this weekly chart of Yahoo, it's just done nothing. They should have taken that deal at 32 way back when.
Moving along to Google to round out large cap tech, we're going to take a look at this one. I think what's interesting here is, especially in Larry Page's letter, no one's really focused on this, but they've focused on the way the stock split. He looks at social, search, and media. Those are the three key components that the company's focusing on versus something like an Amazon where they're still focusing on the platform. And I think this is why Google's trading it 15 times versus an Amazon, which is like at 150 times.
Yeah, well, this stock was my stock of the year to start, and it's still on the radar. It's been very choppy. This is the second quarter now that they've punished anybody holding through as a macro investor. You all know that we're risk averse. We don't take stocks into earnings. We trade them after. It opened up, and you never want to see a stock just sell off right after earnings. That's always a warning sign. And it was up $2-3. By the time you blinked, it was down 20. So now if you look at the chart of Google, you will see here that, you know, you have a high, a lower high. It was looking pretty decent. It was set up for a good report, and then their paid click was down. You know, they didn't like a lot of people didn't understand the whole, you know, new shares, et cetera, et cetera. So PS, you know, this stock did, to me, it broke a bit of a trend line here. Okay, so the way I'm going to judge it is I want to see how long it stays below. Yesterday, you saw a little bit of a rally, but obviously it closed off the high, so there was not that much power. So I would say the longer this thing stays below 630, the more bulls are going to start throwing in the towel here, and then you can get another move below 600. So for me, if you're in there as a macro investor, just have a hedge. And if you're a trader here, the longer it stays below this trend line of 629, the more traders are going to probably look to short it below this 601.66, and the stock just needs time now.
Right. Yeah, so I think the key theme with tech is what's next? What's the next catalyst for the sector overall, and in particular the names? We're going to go to a quick commercial. When we come back, we dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to dive into the trenches with the financials. This is going to be broker versus the regional. Scott, the regionals have performed really well even since 2011, I think because of loan quality and margins, which is why this particular area of financials is catching the bid. Let's kick it off with Goldman Sachs. Earnings were okay, but the stock continues to be under some pressure.
Well, it's the same thing almost that happened, which we'll get into with JP Morgan. The stock was somewhat, it wasn't really up into it, but had a small bounce. And then yesterday, the report was pretty good, but they sold it. So if they sell a good earnings report, that means what would they have done on a bad earnings report? So for me, I've been avoiding Goldman Sachs lately because it's been just very choppy. One good day is followed by a bad day, and there's been no momentum or consistency. So if that's the case, it's just a tough thing to trade. So if you look here at the chart, you will see, you know, every time it's had a big up day, like this one, met with a down day. It was, you know, nice bounce day, met with a down day. So yesterday we opened up into this trend line. There was not enough juice to get above it. I would say watch this little area very closely. This, the low here is about 114.89. The high here is about 120. here's your Quotron that you love when I say
Quotron.
it, is in this box. So I would say it could go sideways and absorb the quarter as long as it stays above this 114 area. Stay with it. But if Goldman Sachs starts to break below this, you might see another move in the banks, and that means that this market has more corrective, opportunities in front of it, or more corrective action in front of it. If it goes sideways and starts to break above this 120, that means the financials could be, back on the move, and then you better switch gears again, because if you're, rolling up your shorts, you can get in trouble.
Moving along to JP Morgan, we own this one in Actions Alerts Plus. This is an ironclad balance sheet, one of the best of breed here.
Yeah, this one I would say if you need to be in something, JP Morgan is the key. And during that corrective action, this is a stock I chose to buy. If you guys remember, I was like, let's buy it right around 43 after a move lower. It actually bounced, thank goodness, into earnings because I didn't have to hold through earnings. And even if you did, it opened up and then they sold it. Another trend that we've been watching. Up a few days, up into earnings, they sell it. If you look at the chart here at JP Morgan, you will see, that was this day. I remember buying it here. You had a nice 2-day move. I left to go to the Boston Marathon, wasn't taking it with me. Anyway, look how they sold the earnings. You never really want to see that, but it took it in strides. I would say if you are long, short term, use this 42.50 as your stop. If it goes sideways and continues to absorb and burns off this earnings candle, I think above this area, it can get back on the move. So being tier 1 at most, it starts to break above this downtrend and the market continues higher. That's when you add, and then we'll probably see new highs on the year.
Speaking of impressive action, I think it's really impressive. You ran the Boston Marathon, took one day off, came back, traded, went on CNBC, then went to the Yankees game. That's pretty impressive in terms of action.
I'm an Ironman, not a marathon runner, so that was only one part of the day.
Moving along to Citigroup, Meredith Whitney. We all know that name. She took it up from underperformed to neutral. She thinks that it's trading below tangible book value, which it is, and that it's going to make its capital target of about 8%.
Ooh, go out on a limb, go from underperformed to a neutral. Why not put a buy on it? Anyway, I've been avoiding this one because, again, if you're trading JP Morgan, if you're trading Goldman, you don't need to be in all of them. I've also used Bank of America because I could grab a lot of that, and it's been trading well with patterns. So I'll take a look at Citigroup, which I haven't looked at. I'll see what Miss Whitney was seeing. So if you look here, you had a move off of support. Okay, it's rallied into this downtrend since the high. So here we are coming into this downtrend. The high here is what, 35.41. They still have to report earnings. When's their earnings date? Do you know?
I think are they on Friday? I think this Friday.
Right. So, as we've seen the trend, okay, we just rallied a little bit. So if it continues to rally into earnings, be a little bit skeptical. And if their earnings are decent and they open it up, don't chase it. It might be a sell. So that's how you use the trend as your friend. But if you want to be long versus that lower pivot. I just don't think you need to be in too much, especially going into earnings.
Moving along to USB, this is a real strong regional. It is our largest bank holding in Actions Alerts Plus. Kramer all over the Twitter feed last night. Stephanie loves this one. It's one of the best of breed in the regional. Strong balance sheet, executing, firing on all cylinders.
I don't typically look at the regionals just because it's hard to look at everything, and I know you guys have been talking about it, and I probably should be looking at them because I punched up the chart of USB right now. It looks great. It looks a lot different than some of the major banks. It's above the 50-day. It's above the 10 and 20-day. It just poked its head above resistance, which you didn't see Goldman or JP Morgan do. So this one is showing relative strength. I think if you needed some bank exposure in regionals, this USB looks good. You have the highs here at what? 32.33. So market gets back in gear. This stock will let us know because it'll probably be a new high as well before the market.
Let's round it off with HBAN, HBAN. This is a newer name for us as well over at T3. David Peltier, our portfolio manager for stocks under 10 over at the Street, has traded this name fabulously. He loves it. It didn't even, last night we knew it was going into earnings this morning. He's like, Jill, still talk about it on the call. They're going to report well. I like this name. So I think it's something new that we can take a look at, paying that nice 2.5% yield.
2.5% yield, that's good, and the chart actually looks good. So if you look here at the stock, I don't trade this one often either, but this can get frisky. Look when it broke this downtrend around 590, it had a big percentage move up into the 6s. Since then, descending channel, descending trend line, descending trends usually break to the upside. So I would say it starts getting above 640 to 660. This will also be a new high. So this chart looks good. It looks kind of like the other one, but from a small cap version.
Right. Let's move along to quick hits for quick cash, and it would not be a morning call unless we spoke about Apple. You did a great job with this yesterday, getting it at 575, out at 585 within 10 minutes of the stock being open.
But listen, that was one trade, and then we got back into 588 and held to 610. So get it straight. No, I'm kidding. But all in all, you had to be prepared. You had to be quick, and everyone in the community knows the red dog reversal. That's why I love this strategy, because you could buy a stock with a plan, not try and catch a falling knife. So if you look real quickly at Apple, you will see guys that tried to catch a falling knife the day before got very hurt because it traded below the previous low, didn't see an uptick, and they really got a lot of pain there. So yesterday was perfect. It traded below the low of 578.25, right? Went down to 571. Once it recrossed, you could have bought that level with the stop at the low of the day as a cash flow trader, as a swing trader, whatever time frame you are. So that first trade was quick, and we did book a nice 10 points, and then approved it can go higher, got back in. I'm still in. I think there will be one more trade. Goldman Sachs upgraded it today. I think if it could trade through yesterday's high of 610, we get one more move to about 614, 615, and that will probably be the short-term trade.
Moving along to panel, our traders are really active with this one again on the Twitter feed. The theme of quick hits today is what we've seen our guys really active in. This one closed up over 7%, crossing its 50 DMA at 38.15.
Okay, let's take a quick look at this because I don't normally trade it, so we'll take a look. It did have its first up day yesterday. It broke this mini, or it's actually, if you look at this, it's coming into it right here. So it broke this level right here of about 36.20, coming up to a big time trend line, I would say, with a bit of time. Look for an entry above 38.84. Here's your pivot right here, but then the moving averages are right in front. So yeah, you have some room to 40, 41 if this market wants to continue.
Moving along to debt, this one closed up over 5%, leading in the consumer space. Earnings were horrible out of this one, so any news is good news.
All right, so let's take a quick look. Deck. Where's Tom Brady? Anyway, yeah, we had a Tom Brady pop way back when, and since then it's just been crushed. Anyway, rightly so. Giants are the big winners there. So here's your first day. Anytime you get a first day or somewhat of igniting bar, you always want to see if it can continue. It happened here. It didn't. So this particular time, if it could hold the top third of this range, I think you could see some continuation through yesterday's high, and that is 65, 62. And then the next big resistance is about 70 to 72.
SWY, that was one of the names that had some takeover chatter last week. I'm not quite sure who would want to buy it. The debt is ridiculously high, and they have some really big pension liabilities. But, you know, anytime you get that takeover chatter, you're guaranteed you're going to get a bid in it.
Yeah, this one I think is up 5 days in a row. So at this particular point, I would not chase unless you really think it's going to get taken over. Never buy a stock for a pure takeover. Make sure you have a fundamental thesis. If you look at the chart here, you know, I wouldn't be short just in case. But, you know, from 1950 to 22, someone might know something because it's pretty extreme from where we were, so maybe something's cooking there. You know, if you want to be in being small and maybe take some in the money calls so you know at least your risk, is premium paid. You know more about options than I do. But anyway, I wouldn't be chasing this thing as a takeover target, but if you want to be in, I would say just go with some calls.
Right. Moving along to Terex, ticker TEX. This is another new one that we haven't spoken about. There's been a lot of options activity in the name. In fact, we traded it yesterday on options profits. I think Wells Fargo was the one that took the rating up to an outperform or neutral. I don't remember which one, but they did take their estimates up. Yeah,
this chart looks nice and tight above 24. I think it can continue.
All right, so at the end of the day, every day, catch Scott and the rest of the team over at T3Live.com as they wrap up the charts for us. Have a great day trading, everyone.